Hi, Sam from Teach You Well to Trade again. Welcome to Module 4 of our Foundation series of learning how to be a trader. This one is all about the trade process. Talk about this a lot, very close to my heart. Took many years to put together, lots of work in industry, lots of work in higher education at universities to bring together a teachable process for people to learn how to trade and then go on to have that sustainable, disciplined relationship with the markets and hopefully get you closer to changing your life through trading. That's the aim. Okay, so enjoy this module and see you on the other side. Good luck. So this module, we're going to go through the professional trading process. We talk about trading is not prediction. It's a structured decision process. And this is what brings the professional edge to trading and separates my training from a lot of other people in the industry that I've seen. It's tried and tested. It comes from institutional studies with hundreds of traders in many countries over the years that I've worked with to really nail down what they're doing and putting into a structured process, which I then had to go on and use to teach traders and my team to go on and teach traders how to implement themselves in the market to then go on and succeed. Why process matters. We look at a process over outcome. You hear this a few times on this module, but it's focusing on that process. Process. Most traders fail not because of bad ideas, but because their process is inconsistent. And inconsistency is the best friend to losses and mischance and mistakes. As professionals, we focus on decision quality, risk control, and repeatability. We're looking for that sustainable, disciplined relationship with markets and things and strategies that are repeatable, processes that are repeatable. Trading is a decision problem. Trading involves a lot of incomplete information. There's a lot of stuff. You can't know everything. No one knows everything about the markets and the price of a product ever. So there's always incomplete pieces of information that we have to deal with. There's uncertain outcomes. Like I say, we can do all our research and have the best process in the world and factor something that should be going up, but it can be going down. Uncertain outcomes. We have many sayings. One of them is the market's going to be irrational longer than you can stay solvent. So it's those repeated decisions. To have that blueprint and that process, it makes it a lot easier to then have repeated decisions and then move on to that consistency. Because trading has that emotional pressure, and we talk about anchor points a lot in trading and with my coaching and my traders. Having those anchor points and the process is certainly one of those. Trading needs to be treated as a decision-making discipline, not a prediction exercise. So let's have a little look at that professional trading process. Professionals operate in a repeatable loop. We'll look at trade identification first of all. That's your first pillar. Trade execution. That's the next part. Trade management, part number 3. And last but nowhere least, trade evaluation. So that's your 4 pillars of your trade process. It's how I operate. It's how hundreds of traders that I work with, up to the thousands, operate. There's lots of moving parts and facets to each one, but those are your headlines, your pillars. Identify a trade, execute a trade, manage a trade, evaluate a trade. It's a consistent loop, not just a one-off action. So identifying just isn't about finding opportunities. It's about defining what qualifies as an opportunity, knowing what to ignore, and waiting more than acting. You're researching a lot more and you're trying to figure out what works and what doesn't. It's as much about what not to trade as it is about what to trade. It's your own filter system. And then you've got execution, which translates decisions into action. Anyone can be an analyst and talk about the markets and come up with ideas. I can teach anyone anywhere how to trade, right? But then the real traders are made, and the success stories are from good execution, and the next part, which is management. We're talking about your timing, your size, your discipline, and then there's the micro stuff, entry, exit, stops. There's a ton of stuff there. There's a ton of stuff in identification. There's a ton of stuff in execution. There's a couple of bits, but professionals execute decisions. They're not just improvising them. Move on to trade and risk management. Management is about controlling that exposure, new market events, anything that's happening that may affect your position size, and again, while you're trading live, and your behaviors and your psychology. That's where a lot of psychology comes into the management phase. It's not about reacting to the price. It's about managing behavior and risk. It's almost accepting that these things are going to happen and having a plan for them when they do. And then we've got evaluation, which happens after the trade, regardless of the outcome. As professionals, we review, was the process was followed, were decisions aligned with the plan, what can be improved next time? Just a few things that we do look at. Winning trades can be bad decisions, and losing trades can be good decisions. This is something that's got to sit with you. You can have a winning trade that could be a bad decision and could be a bad trade, essentially, and vice versa. You could have a loser, which is actually a good decision and a good trade. I talk about this a lot to my traders and to myself. That process over outcome. Outcomes are very noisy. There's a lot, the markets, are very noisy places. There's a lot going on. There's a lot of information flow. There's a lot of trade going on. And you have to kind of operate in that. There's a lot of noise. And that process is controllable. We can only control ourselves, our thoughts and our actions, very philosophical. And process is one of those things that we can control. Long-term results emerge from that consistent decision-making, not just the short-term wins. A lot of common mistakes, forcing opportunities, trying to squeeze opportunities that aren't there, that don't sit within a process that you have almost written down and you've repeated and you've got experience doing. Changing rules mid-trade. See this a lot with traders, and you go over and ask them why they haven't stopped out or why they've added more to a trade. It wasn't part of their plan because they decided to chop and change, changing those rules about the trade mid-trade. You can plan for eventualities and contingencies before you actually trade, and build that in your plan. But if you start changing, flip-flopping your rule sets mid-trade, you do find losses happen and occur. And then skipping one of the stages of the process. All four are as important as the last or the next. A lot of traders like skipping the evaluation, funnily enough. And here is where you win or learn. And this is where we talk about this is part of your growth phase. And we'll discuss that a bit in a module going on. And me, as with my coaching hat on, it's the most important one for me to grow as a trader, and for my clients and traders that I work with to improve themselves as well. It works everywhere. Process works across all asset classes. I'm a multi-asset trader. I've traded everything: single stocks, futures, cryptos, some options, FX, everything. The process, you can connect it to any of those markets. That's why the process works. You can scale it with experience. You can, pick apart the facets in the process that you need to work with to scale yourself as a trader. And it survives challenging market environments. You can have your processes and your ideas and your strategies, everything that fits into your process. And because of the ultimate, evaluation stage that you grow out over the years and understand how that part is so important, you can survive those challenging market environments. It's very structural, not tactical. We talk about anchor points, we talk about blueprints, we talk about checklists, and the process covers all of that. So where this sits is professionals operate in a repeatable loop. For that consistency is absolutely key. Market access is where you trade. Risk management shapes what you can lose. The trading process explains how decisions are made. Everything else is built on this foundation. Okay, your key takeaway. I work my coaching process and my teaching process and all my writing. My book is based on these three facets: preparation, process in the middle, and practice. This is what you need to be a successful trader. Okay? And that was a little bird's eye view of the process and we'll pick it apart in the next few modules, okay? Hope you enjoyed the module. The trading process, like I said, many years curating that, hundreds, almost thousands of traders spoken to, discussed, back tested their results in markets to really nail down what they do, what I do, to be able to teach that as a structure to new traders, which I did do with my team, hundreds of traders over the years since its conception, to then get them to succeed in the markets, essentially, which is what hopefully you want to do also. So we're going to go and break them down individually in the next few modules and have a kind of a high level view of understanding what each one is, each pillar is, and then hopefully you'll be step by step a little bit closer to achieving your goal, which is hopefully to understand the foundations of trading and set you on your way to profitability. Okay. See you on the other side. Stay lucky.